This is how you determine total soups. The best total soups come with the higher time frame order flow and with time and as well with the order flow. What do I mean by the higher time frame in the order flow? They're two separate things. Order flow is if you're day trading, the 4 hour order flow. Is it breaking highs, breaking lows? Is it breaking highs, reaching lows? Is it breaking lows, reaching highs? Market profiling, or what's the higher time frame drawn liquidity? So the daily drawn liquidity, what's the weekly? If the order flow is bullish, but the drawn liquidity in the higher time frame, let's say daily, short-term drawn liquidity is bearish, you're going to be bearish. But you're not going to be bearish for no reason. You're going to know, okay, to have context, narrative, and logical reasoning for this specific trade. This is how you know that this high will hold. How will you know this high will hold? Notice hit it. Order flow, higher time frame drawn liquidity, and time. When did this happen? At a specific time. What was the higher time frame drawn liquidity? Bearish. And what was the order flow? Bullish. But guess what? Drawn liquidity is more important than the order flow because market structure shift does not work. Let me show you guys a quick radical representation. Market go up here, here, go lower, break up structure, and go up higher, right? Why? Because this could be a false soup. This could be a false market shift to the upside, so it doesn't work. So that's why the drawn liquidity is more important than anything. And as a day trader, your most important time frame is the daily time frame because your trades usually last less than a day or within a day, right? So your short term and the long term is the weekly. Weekly could be bullish, but the short term is bearish. You're gonna go bearish because short term is much important than the long term when you're trading, day trading, right? If you're scalping, it's fucking way more important, right? Because the short term drawn will always lead to long term liquidity, and the order flow is not the best way to know if this total soup will hold. Is two things. Like you don't have to follow the order flow because the order flow could be false. It doesn't work. Keep in mind that it does work, but it fails. Keep that in mind, right? The best way to find the best total soups is, and the best way to know this total soup, this liquidity sweep that just happened will hold is by higher time frame drawn liquidity and the time. Time aspect is very important. So you can see market held this high. First false top, second false top, third drive. The third top of his move is gonna hold. Why? Because it's the ICT 3-drive pattern. First top, so fake double top and third drive. Right? First fake double top and third drive. How do you know? How do you know? Okay, how do you avoid this first top, second top? Is by time. You trade between 7 a.m. and 10:30 a.m. So you avoid this. Right? So, like that. Simple as that. And it's by, and as well, high time frame liquidity. High time frame liquidity is overall bearish. How do you read the high time frame liquidity? You could watch my ETU free Mastermind CRT bootcamp. It talks about drawn liquidity, short term liquidity, long term liquidity, the concept you need to determine drawn liquidity, ERL, IRL, CRT, candle ranges, daily ranges, equilibrium, all of that, right? It talks about all of that. It talks about market profiles, expansion retracement, reversal, consolidation, all of that shit, right? So that as well. But the way you can determine high time frame liquidity is simply by the daily time frame. Look at candle ranges. Look at open, high, low, close. Look at the weekly profile, daily profile. Weekly profile is not here because it's Monday, but daily profile looks like, okay, we have in the lower time frame new continuation. On the higher time frame, we have what? For a weekly profile, we don't know it, but guess what? We're selling above the opening price of the weekly time frame. We have a daily ERL to IRL, a daily premium ERL to discount IRL, a daily ERL to IRL. We're in premium daily range you want to sell. We have a range high to range low. In the lower time frame, we have more market context now. Unless since we have our high time frame drawn liquidity, now we're looking for our lower time frame context. Super low, super high, stable low, stable high. Premium discount. We have a daily range. We have a range high, range low, range high. Fucking weekly CRT high, daily CRT high, range low, daily range low, as well as nothing else. How come this is our range low right over here? It's not because there's no actual low here, but how come this is our range low? Because daily CRT low, and that's how you determine it. This is how you determine the context and nature. That's how you determine how a turtle soup will actually hold. So our overall, you can see we're overall bearish here, right? We had a SMT with this 5 a.m. high with GU. Although you can see GU failed, but guess what? Before that happened, you would have profited. With SMT, you're chilling for you have a key level. So all you're looking for is an execution here. So now once we have the right time, now this all must happen within a specific time here. Now, how would I say? Why did this two fake double top failed and the third drop happened? Because these did not have the right time. So we're looking for the right time. Right time came around. Now what we're looking for is a explosive. This is how you know the turtle will hold. A explosive and aggressive and speedy push into the key level, and we get a little consolidation in 15 second. This bearish candle is a consolidation in a 15-second time frame or a 5-second time frame, and eventually all we're looking for is our point of interest. Once you see this, either I'm saying, if you see this bearish aggressive candle to the downside, we could sell, or looking for this for inversion, which I don't wait for. I just wait. Look, okay, this is a bullish key level. I'm looking for this bullish key level to get inverted. But I'm not looking for it to get closed and get retested. All I'm looking for is, okay, this is my point of interest. We first aggressively tap the key level. We first consolidated. The next thing we're looking for is aggressive move to our direction. So as I were bearish, and this candle is aggressive move to the down in our direction, and we're looking for an aggressive movement from our entry. Our entry is overall here. So market right here is doing aggressive. Oh, and then you entered here. You did not enter here. Like, this is telling you the fucking overall base. And don't be egotistic here. It says we're entering here, around here from our entry, or from our entry to around, or somewhere around here till we in drawdown, where we're looking to enter the trade. Where let's just say we entered, let's just say the market's in drawdown. We're looking for a impulsive, aggressive move to the downside. So we're looking for a aggressive movement outside of our entry, from our entry to our drawn liquidity. So we have an aggressive move to the, right over here. We're entering here. Let's say we enter somewhere around here. We get aggressive to the downside. You can say aggressive movement to happen to our drawn liquidity, and that's a good sign that this total will highly likely hold. That's because usually if the market goes slowly to your key level, that's highly likely just keep ran. It's gonna keep on going forward, because you do not want the market to drag it. You want the market to control it. And because how do you know the market's controlling it? By big ass fucking candles. This is a big ass candle to this specific price point. So market's in control. When it drags it, usually when it drags and hits your key level, it's lower probability. It will probably sometimes work, but it's lower probability, very low probability. You just pause it, you just go up higher. Because one minute sometimes you enter a trade, market just goes slowly to your stop loss, right? Without giving you aggressive movement outside of your entry here. So this is how you know the turtle soup will hold, and how to enter the turtle soup. I've already given the sauce here. And keep in mind, if you tried that in the live market, I just told you the method of entering a turtle soup. If you try the live market, you're gonna fail. Why? You need to be good at analysis. You need to be good at analysis. You need to be good at at your edge. Because I know, okay, this is where it's highly likely to make the top here. And guess what? Market made the top. So around here, I was like, okay, it's gonna be highly likely to make a top. So I'm looking for some sort of a trade around here once I see a good reaction. But how do you know that this low would make it low? What's the context? What's the narrative? What's the logical reasoning? All right, I have logical reasoning, but we don't. So the reason why this holds, because I've traded this shit multiple times, and I know, okay, every time I take a trade, it's highly likely that right there is gonna be a very good safe low that's gonna highly likely hold. So it says it's gonna hold the good stop loss, right? It's a good stop loss. It says that means I know, okay, there's a turtle soup, there's a confirmed turtle soup there. I could guess from last week. It goes to last week with the 1 minute time frame here. It sound good. How do I know that this low will hold? Because I've been trading it for such a long time, and all I'm looking for, okay, we, have SMT here, we have a concept to the upside, we have logic to the upside, we have all of that shit. Now, how do I know this hold? It's just through, because when I enter my trade, usually if you guys see me, I usually enter the top or at the low. So because I trade ranges here, right? I enter the top and the low. So if I'm gonna take a top and a low, and when I take ranges, when the range high gets pierced, you go to range low, the range high makes a high there, so that's the stop loss. So that's how I know, okay, this sort of how I like to hold. But that only comes through experience. But you probably won't know, okay, if you got, but the only way you could get near doing this, you need to know about ranges, CRT, which I talk about it in my ETU free mastermind CRT bootcamp. But yeah, see you guys later. Thanks for watching. Make sure you guys like, comment, subscribe, share, and join the question down below. As you guys show you guys 2 examples. How does highlight to hold? Multiple reasoning, context, narrative. How to look is bullish. The order flow is bullish in this case. The order flow didn't have to be bullish, but it was bullish. You know, if it's bullish and it goes to your narrative, cool. Just got another context there. You know, we had the high original liquidity. We had the right time. We had the order flow bullish in this case. Order flow in this case was bullish, but guess what? With everything else, which we're good. But like logical reasoning, context, with SMT, etc., that's why he worked out in our favor. And one lot of cooked sauce, you must always have a lower toughness CRT to know how to do a hold. But I'll see you guys later. Peace out, and I'll see you guys later. And join the discussion down below. We got a paid signal group right around here. You could participate. The signal was given to the paid signal as well to the Discord signal. This was given out. I made fucking nothing, but this is when I enter the trade over here. After the trade, it's my position. If you take the same signal as me, cool. Now that's your position. You can get out wherever you want to go. We're up 3RR here. So you could have catch out 3RR or 2RR or whatever you like. But I was going for a 5RR, but this trade was overall not my trade I was supposed to take. This right here was my trade. If I were to take that trade, I would have been out. But you know, the next time I didn't pay attention to the chart, so I got fucking clapped. But it's all listenable. But yeah, thanks for watching. See you guys later. And don't forget to down below. And see you guys later. Peace out.